Cryptocurrency market analysis today. Today is March 9th, 2026. The crypto market is facing significant pressure due to geopolitical tensions and a spike in oil prices. Here is a 30-word video script in English. Bitcoin hits a 7-day low at $65,600 as surging oil prices spark extreme fear. With the 20 millionth BTC countdown active, is this a brutal shakeout or the ultimate dip?
Looking at the daily chart, it's moving as we expected. We believe this consolidation range will continue. After reaching the upper level, it might test the previous area, consolidate again, or even break through that area again. This was stated beforehand, and it has indeed moved in this direction. Moreover, when it broke through upwards, you can see very precisely at 1.13. It's at this 1.13 level that it's least suitable to chase the price higher. However, when it reached this point, I noticed that market sentiment seemed to believe the bull market had returned, and so they insisted on pushing the price up to 1.13. Around 3, people are going long here. I looked at some of their reasons, and they said it's an accumulation zone below, and that a bull market is about to begin. Okay, that's obviously not the case, right? 1.13 is usually a reversal point. And then it fell back here. And after yesterday's daily close, it's a pretty clear signal. It has indeed fallen back on the daily chart, and after the fall, it's looking for the next target here. Okay, currently it's still a smooth decline. And we don't have anything special here. Things are easy to do. So, when it's falling all the way down, I've been reminding everyone to short along the trend. That might be simpler. I'm still holding my previous short positions. And when it came to this point, I didn't want to lower my original entry price, so I opened another position on another exchange. This is quite clear and easier to trade. At worst, if it goes back up after reaching this point, I'll set a stop loss, right? Anyway, currently, if today's daily candlestick is a bearish candle, then I think the probability of it falling back to this level is probably as high as 100%. 80. So, from a daily chart perspective, at these levels, there are indeed no good long positions. If you have open positions, just continue trading. It's very clear, right? Sometimes when I'm doing a show, I like to do things like, I made a prediction, but it turned out to be wrong. I find that particularly interesting because I can learn something from that failure. This one went exactly as we expected, which seems to lack a little something. But that's okay, let's keep watching. We can see it consolidating, then slowly declining. So, if we look at the order book, let's review. Previously, here, the price didn't break out to a high point. Then, in the CBD area, there was a bearish divergence. After that, it fell back. After the fall, it consolidated. Then, mainly, some positions were gradually reduced. So, where were the positions that increased before? You can see here, there were 1,800 and 1,600 here. There's also another position, that is to say, after the breakout, there were over 1,000 long positions here. These positions, after the fall, were gradually reduced. That is to say, they were stopped out again. This is the current situation. Here we see a 2.2. The increase in case position, if there's a rebound here, might break through this level. That means, there's an opportunity to test the previous level. So, if there's any opportunity to test this level, shorting is still worth considering. Why? Because it will trigger the stop-loss orders of those chasing the short position, and then there might be a continued smooth decline. That's the current state of the baby's market. So, whenever it reaches this level, there will always be a lot of people buying. If the price falls to certain levels, there will likely be a lot of short selling or panic selling. Regarding our long positions, if the market continues to fall, let's look at some levels. If you want to take profits in stages, you can do so within these consolidation ranges, such as the proof of consolidation, POC, level. For example, here, you can set your first profit target. If it holds here, it might test the previous area again. However, regardless, I personally believe that a profit target of 1. Partly, however, I still believe that regardless of whether it failed to hold or rebounded, the previous lows were rather tempting target levels. Why? Because the initial upward trend was designed to attract everyone's attention, allowing you to set stop-loss orders below those lows. So now, it's simply a trap set up beforehand, and many people have fallen into it. Now, it's like hunters returning to reap the rewards. Some traps were drawn here, and now some have fallen in. Rabbits. And now, we'll harvest these rabbits. I think it's quite likely the market will reach this level. After reaching this level, whether it will immediately return to this level, I need to see. Because it's impossible to predict that far ahead. I'll observe the reaction here. If it reaches this level and there isn't a decent small rebound, then I think it's quite likely it will return to this level. I even judge that if it reaches this level and there's strong buying pressure, and then it consolidates like this, then I think you should.